fight through resistance. Right on the breakout, on this fake out with no assistance. Oh yeah. While the bears circle, the bids go purple, but I don't fold. You're golden, baby, I've watched you daily, I bought the hold. Buy and hold. No, I won't let them short you, won't let them short you. Oh no, won't let them floor you, won't let them floor you. So here's the bet, I leverage youth and traded all my debt. Bought back regret with calls I hadn't placed yet. Now here's the breach, my brokered soul just hit its peak, dressed in returns to clean to speak. Feeling alive, 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 alive. Should they halt you or dilute you, I'd still reload it. Shoved in my savings, ignored all warnings, I overdosed it. No regrets. You dipped in silence, I bought in defiance, I named that knife. Now they all whisper, he's not a trader, he gave it life. No, I won't let them shore you, won't let them shore you. Oh no, I won't let them floor you, won't let them floor you. So here's the bet, I leverage youth and traded all my debt. Bought back regret with calls I hadn't placed yet. Now here's the breach, my brokered soul just hit its peak, dressed in returns to clean to speak. No FUD, no fear, just a moonlit high. Alive, 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 alive.
Oh, brother, oh, brother, oh, brother. Welcome back to another episode of Matt Kohrs Show, where I'm Matt, your Kohrs, and together we might just be able to put together this show. It is a beautiful Tuesday, May the 20th, and I'm kind of excited for today. I know that if you're looking in pre-market trading, the overall market is slightly red, but some of our favorite equities are looking pretty nice. Personally, right now, I think up on deck in the batter's box, we have Tesla, we have MicroStrategy, we have NVDA, we have Palantir, we have certain favorite equities of the community that, man, oh man, are they looking a little spicy. They're looking a little froggy. They're looking like a frog found a hot tamale, and they're looking to hippity hop a little bit higher. So hopefully we get some follow through on this particular session. Now, if you want to know why I'm tracking this particular group, that was exactly in the update video yesterday, kind of showing it off because the overall market coming out of OPEX, things are a little quiet in the general market, and most likely we're going to find opportunity in individual equities rather than overall indices, and it's just where we're at in the monthly cycle, so it's not that crazy. In fact, this is kind of a normal way that the equities market plays out. So obviously, for all those of you who watched that update video, a special shout out to all of you. I do appreciate the support. And then on top of that, a shout out to all of you who are already here at the crack of dawn. Here we are at 9:03 in the morning, up before the rest of the world. I don't even know who would possibly be. I think we're up before the farmers right now. It's 9 in the morning. This is crazy, crazy early. So I do appreciate you guys being here. If you haven't already, don't forget to hit that like button on both Rumble and YouTube. As soon as we cross 500 likes, I will give you guys the Cats Rule the Earth tarot card pull for the day, so we know exactly where the market's going to go. Yesterday, you guys blew me away. You all smashed the like button, and we pulled the moon card, and that's exactly what the market did. We started off real deep red. Everyone was running around with their head on fire, and guess what? it ended up being a nice green day, a beautiful recovery. I know I made money. I know the Goonie community made money, and I very much hope that you all made money as well. And let's see if we could run that back today. Let's see if we can make a little bit more money today. And obviously, I'm not the biggest fan of it, but if you want to know exactly where the market's going to go, you know exactly what to do. We got to pull the tarot card, and for me to pull that tarot card, you got to hit that like. So I'll let you guys figure that out if you want it. If you don't want it, that's all up to you. And in between now and then, I'll give you a little bit of a breakdown of what's going on in the market, but in reality, the news is kind of taking the second seat right now. The exciting thing of what's going on is the actual price setup, the option setup, technical support, technical resistance. So much more of like kind of the way the pendulum goes back and forth. We were in April in this insane cycle of the only thing that mattered was news. Volatility expanded, and we were just every single day, day in and day out, flipping a coin of what in the world is happening with news. Wasn't really the mode of reading technicals. It wasn't the mode of reading fundamentals. It wasn't the mode of reading the option setup. But ideally, we're now coming back to that, which I'm saying ideally because this is the environment I personally prefer to trade in, because I don't have to take on that binary risk of will a random announcement that we don't even know when's coming out, not even a binary announcement of inflation, but more of just a random tweet or update related to the news cycle and the trade war. It seems like we're kind of getting out of that cycle and going back much more to what I believe core active trading is tell me the technicals, tell me the setup, tell me the fundamentals, tell me the option structure, tell me the gamma levels, the delta levels. That's what I want to know, because it feels like we could approach the market in much more of an empirical manner, which is where I personally feel way more comfortable. So I'm excited for this. Yesterday, like I said, we started off the week really, really strong, and let's see if we could go for 2 for 2 on the week right now. Hope you guys had a great day yesterday. Hope you got some sun, hit the gym, had a healthy diet, did everything you wanted to do, and I hope we are ready to run it all back today. So I do appreciate you guys being here this early. Piper? Oh, Piper's in the room. Can you guys see her? The chair is not moving because of a ghost. You could kind of see it. There's like, the camera's having a tough time focus. You could see a tail in the background. There's a rogue tail right about there. So the lead chief investment officer of this entire operation might be making a surprise appearance today. So you never know. Let's see if we could get it rocking. And on that note, here's a little looky-see at what's going on. Stock futures slip after the S&P 500 extends the winning streak to 6 days. The old 6-peat, the old double turkey, whatever you want to call it, the market is green, 6 days in a row, closing above the previous close, and really it all got going Monday of last week, and let's see how far we can keep this party going. We've had a few technical breakouts, we've had a momentum shift, structure's obviously bullish, and then the question here for the overall market is what in the world is going to be happening with options, because do not forget, on Friday of last week, it wasn't a normal Friday, it was an OPEX Friday, and unfortunately, a lot of the call open interest, all of that supportive gamma just burned off the table, and even if it were to be rolled, it would be rolled to the June monthly, and that's a couple weeks away. And remember, gamma has a larger influence the closer to expiration it is. So there's a big difference between buying a call for 6 months out and its gamma impact rather than 1 week out and its gamma impact. The closer in time it is, it has a larger impact on gamma. And right now, with obviously the massive explosion in popularity of option trading, specifically 0DTE, you really have to care about the short-term stuff because it has a measurable impact on how the market makers either do or don't have to react to various situations. But overall, yes, we are running. The SPY right now is slightly below its closing value from yesterday. Same thing with the NASDAQ. Tesla is looking great, trading. At one point today, we were already up to 347, currently trading at 346. MSTR, I was watching that just because Bitcoin's been real strong lately, hanging out at 105. Netflix, not that far from another new all-time high. Meta tried to get a reversal going yesterday, a little bit quiet in pre-market trading. There is really a plentiful amount of opportunity. Palantir really waking up this morning. Kind of a rare red day for it yesterday. Palantir, kind of one of those stocks that right now, for good reason, a lot of institutions and retail traders are excited about because it's the gift that keeps on giving, which is why I was saying yesterday was a bit of a rare day for it, but seemingly doesn't matter because it's already already making it back today. If you're looking at the futures market right now, the bulls are still in control from a momentum basis. Excuse me. Sorry. I don't know if you guys heard that in the background, but I just had a little bit of a sneeze. But anyway, from a momentum perspective, the 5-minute, 10-minute, 30-minute, 4-hour on the S&P 500 currently favoring the bulls. On the NASDAQ, the 5 and the 10 are neutral, testing to officially go bullish, while the 30 and the 4-hour are attempting to hold bullish. So that's like just a high-level generic setup of the day. If you look at the options market, the 0 DTE, it does have more puts than calls, but the remainder of the week has more calls, and the full chain does also have more calls. Yesterday at market open, everything was put dominated, and throughout the day, it became a little bit stronger in favor of the bulls, in favor of the calls. So right now, even though today's technically put dominated, the open interest has more puts than it does calls. It is way less put dominated than market open yesterday. And on top of that, what we're seeing is actually not necessarily long calls and long puts. If anything, we're seeing a lot of premium selling, as in putting in a floor in the ceiling on the day. But obviously, let's wait till the market opens and see what the true, I suppose, dynamics of the day are. Ray Dalio says that the risk to the U.S. Treasuries is even greater than what Moody's is saying. Bridgewater founder Ray Dalio said Moody's downgrade of the U.S. credit rating does not take into account the risk of federal government printing money to pay its debt. Bondholders would suffer losses due to the depreciating value of the money they are getting paid. Remember, when it comes to bonds and yields, they move inversely. Bond prices go down as yields go up. Yields spiking have a lot of bad news associated with it. But remember, in this particular case, it's generally an assumption of you have a higher yield, the more people start to say, are you really going to get something paid back? And that's particularly bad when you're talking about U.S. Treasuries, because it's representing a lack of faith in the overall U.S. government. And this is loosely what this is tied to here, what this particular conversation is tied to. And we could go on for hours and hours and hours of fiat currency and no longer associated with the gold standard, and the US dollar is the world's dollar, and what does that mean, and what does it mean if our other countries, particularly our adversaries, continue to dump treasuries? That could cause yields to go higher, and it might put overall pressure on the fiat system. And hey, maybe that's part of the reason why Bitcoin and gold are going up right now, because people are starting to say, well, maybe we need to store our value outside of the fiat system just in case something breaks. So I think there is some understandable sentiment to what Mr. Dalio is saying here, but also don't forget, this is the same guy that's been telling people for years that you got to invest in China, invest in China, invest in China, invest in China, and look at how that particular trade has worked out. So it's not like these people are they more informed than you, than me? Yeah, probably. But are they somehow clairvoyant beings knowing exactly where the market's going to go? Well, no, not necessarily. So it's good to understand where people are coming from, but just because they're saying it doesn't necessarily make it right. Please remember that. Very, very important. America's fiscal situation threatens the good mood on Wall Street. I know on this show, it's a lot more of degenerate options and futures trading, but right now it is important to pay attention to what's going on in the fixed income market because of all this. Like, what happens when you print money, especially at the degree that we do? What happens when you have a deficit, a government deficit climbing at the rate we do? I mean, we pay billions of dollars an hour in interest just on our debt. It's unsustainable. And this has been said by many, many people. And honestly, you don't even have to have an economic business background to understand why our debt growth is unsustainable. Is the magnitude of our debt unsustainable? No, not necessarily. Actually, that could be managed at what's set at, like 35-ish trillion. It's in the 30 trillions. It's the concerning thing is the rate of our debt growth. And that's what we hear time and time again. And in reality, that's going to be a main focal point of why we're not getting the rate cut right now. It's because of our debt growth. I know right now it's become a very politicized thing of Jerome Powell is against Trump and he doesn't want what's best for America. You got to cut it. Well, folks, the story is far more complicated than Jerome Powell politically just doesn't like Trump. In fact, that's a very surface level argument. And if you think that the entire monetary policy decisions are made because of political decisions, I'm not so young and naive to think that there's not politics involved. Of course, I know there's politics involved, but I'm just campaigning for the fact that it doesn't just stop there. There are much more complicated variables in this particular equation than just, oh, Trump doesn't like Powell, Powell doesn't like Trump. And right now, a very concerning thing is what is happening in the bond market and what is happening really with the U.S. government debt. And that's honestly part of the reason why if we do get a rate cut this year, as of right now, and I covered this in the update video yesterday, the odds of us getting a rate cut aren't until September. And it's, I guess, like the triple combo situation of inflation is not where we need it to be. Our debt growth is way, way too high. And just the uncertainty of how this trade war is going to play out. Those are pretty much, I mean, I'm not coming up with this myself. It's really from Jerome Powell himself and all the other Fed members. There's a reason why they're getting these unanimous votes, because all the data they're taking in suggests that this is exactly where they should be. And I get that it's becoming very, very politicized of the only reason they're not cutting it is because they don't like Trump. And I don't know, maybe they do like Trump, maybe they don't like Trump. But my point is that if it's like that's exclusively your reasoning, that's so small. That's a grain in the sand of this particular beach of all the things going on. Matt, Mr. Transitory should resign. I mean, you could think that, but in reality, he knows far more about the economy and monetary policy than all of us in here put together. I'm not saying everything he's done is right. Obviously, even himself, he said we've printed too much money during the COVID period, but there are ratings of Fed members, and they generally come out after they retire, and we kind of, because it takes years for it to build out in the system to see if what they did was right or wrong. And in terms of Fed chairs, he's most likely going to end up being in the top half. He is not, by people who understand this, from people on Wall Street, from all the fancy schmancy people with PhDs in the economy. He's not going to be a bottom half chair Fedman. He's going to be in the top half. Now, is he the best we ever had? I wouldn't say that by any means. But right now there's this particular story that he's somehow absolutely horrible and saying like this, and like he should retire. It just doesn't make sense. I think for people saying that, I would just implore you to do more of your own research. He missed obvious inflation. What are you talking about? That's why the Fed rate is still up. Why do you think you're literally arguing against yourself? You're saying that Mr. Transitory, so you're now taking the opposite, or I don't think you realize how self-defeating your own argument is. Folks, this is a very, very complicated monstrosity of what's going on. And in reality, the entire Fed, not just Jerome Powell, but remember, all of these members, it's been unanimous votes. There are 19 voting FOMC members, and they've all agreed. So even if he were to retire, guess what? The person who takes over, it's going to be the same thing. This isn't one of those things where it's been highly contentious and some of the Fed members want this and some of the Fed members want that. And if you could get the right person in, well, maybe the vote would go the other way. No, they've all been in lockstep. Some of them are left-leaning. Some of them are right-leaning. They all represent very different areas of the United States. And guess what? Every single vote, they've come to the exact same conclusion. Every single one. So this idea of he should resign, congrats, he resigns, and then we get the exact same thing because they've all been voting for the exact same thing every single time. And it's things like that I think people are getting spun up by headlines and not really doing a deeper dive into this situation because, I don't know, maybe you're of the opinion that he's too late and he should resign and retire. And guess what? Congratulations, literally nothing would change because we don't have a Fed president that's been disagreeing, saying we should do something different. It's really not that hard to look into it. And it's just, I fully understand we live in the world of just headlines and people become an expert after doing 2 minutes of research. And this is honestly just like a perfect example of it because whether he was in there or not in there, it would not be changed. And one thing that's going to have a big influence on it very soon is this big, beautiful bill and the fact that we have basically up until 6 days from now, Memorial Day, to potentially get this passed or not passed. So that's going to be the hot political thing, I would say, of the week right here. Check this out.
House Republicans have a lot of work to do before Memorial Day. That's the self-imposed deadline to pass President Trump's so-called Big Beautiful
This upcoming
bill.
Monday,
They'll
remember,
need to
market
smooth over
close.
some serious party divisions to advance the plan to the Senate.
We got a few issues to resolve, but we're working with all the interested parties to do that, and I'm confident that we will.
This bill is extremely important for Republicans to get passed. It includes President Trump's top priorities, from the border, from his promises about energy, to even taxes, no tax on tips, extending his tax cuts from his first administration.
The One Big Beautiful Bill Act is ordered.
The bill cleared a key hurdle late Sunday and could reach the House floor within days. Although the party is grappling with disagreements over Medicaid, clean energy tax breaks, and budget deficits.
One or two members hold a ton of power and leverage. Speaker Johnson can only lose 3 votes, and this bill is so important to the president, the party, that a lot is resting on him. There's this tension in the party of where to both enact President Trump's tax priorities, extending his tax cuts from his first administration, but also including spending cuts.
The current proposed bill would increase projected budget deficits by nearly $3 trillion through 2034. It includes several $100 billion in spending increases on border security, national defense, and support for farmers.
You've seen this internal fight over Republicans who wanted to focus more on taxes and argue that that would bring in revenue, and deficit budget hawks who wanted to do 1.5 trillion to 2 trillion in spending cuts.
Some conservative hardliners want to accelerate spending cuts along with a quicker expiration of President Biden's clean energy tax breaks.
The House Budget Committee had a meeting where essentially they were doing last-minute scrambling, closed-door negotiations with 4 conservative holdouts on the committee who took issue with a few different things about the bill. They don't like a delayed phase-in for certain elements related to work requirements when it comes to able-bodied people on Medicaid, similarly kicking off illegal immigrants from receiving Medicaid checks.
And if we would reform Medicaid, we could actually get to the core of the problem. But we refuse to do it. And I'm not going to sit here and say that everything is hunky-dory when this is the Budget Committee.
We don't really
Hunky-dory.
know what was promised behind closed doors. Chip Roy on social media, one of those 4 holdouts, suggested that they were going to be moving up the Medicaid work requirements. Republicans argue that the program for Medicaid might not be sustainable moving forward. The Medicaid defenders, some of them have argued to me that kicking off people with low income from Medicaid would just kind of be cruel, and it would impact them heading into the midterm elections. Democrats are hitting the message that they are kicking off people off of Medicaid, taking their health care.
The American people do not support this extreme and toxic bill. And we're going to hold every single House Republican who votes for it accountable.
Once the House succeeds in getting this bill passed, it's off to the Senate. And there's a lot of sort of questions about what the Senate will ultimately do with this bill in terms of pulling back on certain Medicaid provisions. There seems to be less of an appetite in terms of spending cuts in the Senate GOP than there is in the House GOP. I think that you're about to see, which is not unusual, a clash between the Senate and the House before the bill eventually reaches the president's desk. There is one person who can hold a lot of sway, and that is President Trump. A lot of Republicans in the party think that this is their one big shot for the one big beautiful bill. We're waiting to see how this week unfolds as they sprint to the finish line.
All right, so that is going to be a very important part of the remainder of this week and specifically Monday. But very quickly, history shows that the Fed had consistently waited too long to react to economic pressures. That's verifiably false. I don't know. I get confused when people say things such as that, and they're saying it so confidently. And history actually tells us the opposite. Look at what happened in the mid-'70s to the early '80s. We ended up cutting rates too early, and guess what? Inflation shot back up. We got into the early '80s. That was a fucking disaster, and we needed Volcker to do some extreme stuff to get us out because guess what? They reacted too early. So to say that the history tells us, dude, you literally just came up with that comment with actually no evidence. You just typed it in your keyboard because you wanted to type it into your keyboard and you thought it sounded smart. You're using such a small data set of, hey, I've paid attention barely to monetary policy over the past couple of years, and I'm going to extrapolate that to the entire history of the Fed. And it's weird because it sounds like I'm defending the Fed, and I actually hate the central bank. I hate the Fed. I hate how this all plays out. But also, like, the truth is the truth. So for you to say that, you just don't know what you're talking about. And I want to make it very, very clear. I don't think that central banks are a good idea. This way that we're into fiat currency, I think it leads to a lot of bad things. But just statements like that of, no, they always react too slow. That's what history shows. Dude, you don't know fuck all about the history of the Fed. Truly, you do not know anything about it. They reacted way too quickly in the mid 70s to the early 80s. Not that I was alive, but I'm sure some people in the audience were. That was all because they cut rates too early. And then it caused a complete disaster in the early 80s. And it does not take much research to realize all the extreme steps that Volcker had to go through. I mean, we think of mortgage rates now as extremely high at 80%. Back then, they were clocking in at 20. The early 80s were a crazy, crazy, crazy time. And it's all because of an early reaction, and inflation just got out of hand. We thought we took care of it. And right now, this isn't my conjecture. This is literally commentary from Jerome Powell himself. They would rather be too late than too early, because the punishment for being too early is far more damaging than a punishment for being too late. So in terms of like which way are you going to skew, they would rather overdo it than underdo it, because like I said, the bill for underdoing it, when you're talking about inflation, because you've printed 40% of the money supply in less than a year, year and a half, 2 years, that's going to be far more punishing. So with it, basically, there's a lot of unknowns, but the TLDR is this, is you're not on the FOMC committee. I'm not on the FOMC committee. And as of right now, the earliest we're going to get a rate cut is September of this year. That is the earliest. And even some of the larger banks right now are basically saying, no, we don't think we're going to get any rate cuts this year. So if you're betting on a rate cut in June or July, good luck to you, because it ain't coming. Anyway, coming back to the big, beautiful bill, there are other things in right now the political arena to consider. Senate advances a major crypto regulation bill on a bipartisan vote. The Senate advanced a major cryptocurrency. Hang on, what was this? Sorry, I'm getting some weird alerts. Oh, is anyone else's trading view alerts like somehow broke? Mine are popping off for some reason, and the market's not open, and it's not on the futures market. Anyway, sorry. The Senate advanced a major cryptocurrency regulation bill Monday on a bipartisan vote, 2 weeks after every Senate Democrat united to block it. The procedural vote on the Genius Act, which would establish the first regulatory framework for issuers of stablecoins, digital tokens pegged to the fiat currencies like the US dollar, was 66 to 32. 16 Democrats voted with the majority of Senate Republicans to advance the bill. 2 Republicans decided to not go with it. So on top of the big, beautiful bill, we also have potential crypto, development, another thing to obviously pay attention to. Now, as I said yesterday, from the aspect of macroeconomic events, we really don't have much going down today, or in reality, this entire week. It's kind of a quiet week in terms of inflation reports, retail sales, speeches. Yeah, we have some Fed speeches, but nothing like massively impactful. Of course, at any moment in time, we might be getting news about trade developments, but really there's nothing scheduled there. Yesterday was thought to be an exciting day with Trump and Putin having a conversation. They lasted for 2 hours and people said it went fine. They were both seemingly happy about it. But even there, it seems like there's going to be a bit of a pause. Overall, this is the first time in a couple months now where this is a week going to be driven purely by technicals, price action, and options flow. There really is not much news going on. Even earnings season is pretty much over. Yeah, today, Palo Alto Networks, that's one of the favorites of Pelosi. We heard from Home Depot this morning. Tomorrow, Target and TJ Maxx, Snowflake, Zoom. we are pretty much done with earnings season. Circling back a little bit, Home Depot CFO says retailers won't raise prices due to tariffs, reaffirms full year forecast, kind of bucking the trend a little bit, if you will, because a lot of these CEOs, CFOs, and companies as a whole are saying we can't give you guidance because of tariffs and we think prices are going up. Home Depot, the last time I checked it in pre-market trading, even though the earnings weren't that amazing, it was up 2%. Some people liking the fact that they're saying, no, we're confident that we're going to be able to handle the ship in a little bit of choppy seas right now. So Home Depot, some good numbers. Home Depot, I'm kind of a fan of it as a long-term investment. It has a decent dividend, quality stock in my opinion. I don't really actively trade it, but I know some people in here once in a while I see you guys talking about it. So I just wanted to bring it up that actually had some positive numbers. Very quickly, yesterday, my premium selling strategy made $2,125. Here's what happened at 10:10 in the morning. Piper fired off with a bullish call out, 4 out of 5 confidence, a SPY put credit spread, and a Q put credit spread. The minimum cost of that was $368. Obviously, you could scale it up for every $368. That would have returned 32. So the key thing is more the fact that it returned 100%. I took a slight variant on it. I always trade SPX over SPY just because it is a European style contract, as in you don't have risk of getting margin called because it is cash settled and not asset settled. Anyway, as you can see, that returned $2,125, which would have paid for more than 3 years of you being in the Discord. If you want to check it out, the Discord is free for the first month. It is in the description of the video. Just use that code Goonie. Once again, you get full access to everything for the entire first month. And even if you don't like it right here, you could join the Goonie Discord, mattkohrs.locals.com. There's the button to do it, or it's the second pin link. And even if you don't want to be a supporter, if you just want to be a member, which is free and you don't get into the Discord, you still get this newsletter every single Sunday to your email inbox where I break down what's going on, the earnings, the major macroeconomic events, and the seasonality of each individual day, which brings me to my final point. Today, Tuesday, May 20th, the Bulls have won this day over the past 27 years, 63% of the time. Here's a look at the hypothetical equity curve you would have. Basically, for the past 12 years, the Bulls have been in control. Higher highs, higher lows. This is a seasonally bullish day. Is it the most bullish day we've ever seen? No, but the Bulls do historically win this day out. So I just wanted to share that with all of you. And then on that particular note, dingity ding ding ding, the world's largest casino is now open. Best of luck to all. Play responsibly, and if not, have fun. It's just money. You can't take it with you when you go anyway. Everyone cares about the fun bet stories, not how much you're actually net up. Remember that. Everyone wants to know who's the biggest degen. So as I normally do, I'm going to let the market kind of open right here, coming out of the gate here. Let me reload the options flow. We don't need that. We don't need that. Coming out of the gate, kind of flat on the S&P 500, coming out of the gate, kind of flat on the Mag 7. Let's come back to that in about 5 or 10 minutes. From a momentum perspective, I'm looking for the 5-minute and the 10-minute to push above. I'm looking for the 30-minute to hold on the S&P 500. Same thing on the NASDAQ. The 5 and the 10 and the 30 are in kind of a flux transition area. So I want to see, are the bulls going to prevail or are the bears going to prevail? And right now, these are the key levels. Feel free to screenshot this. Feel free to do whatever you want with it. Write it down, screenshot it. In my humble opinion, these are the key levels of the day. This white box is my transition zone, as in a choppy price action area. Above it, I would define as bullish. Below it, I would define as bearish. And within it, once again, I would define it as choppy. So that transition goes from 5930 to 5963, pretty much the closing value from yesterday. So once again, bullish above, bearish below. The red, the white, and the red lines are the green, the red, and the white are yesterday's high, low, and close, important technical areas. And then from there, we have the yellow horizontal lines, which are key open interest levels of just the 0DT, of the weekly, and of the full chain. So those would be important levels to see how the market reacts. So right now, obviously, as you could tell, we are opening right at an open interest level, 5950, key psychological level, and within the choppy transition zone. So what does that mean for me in my trading? It means literally do nothing. Now, obviously, you can do what you want. I'm not your mom. I'm not in control of your money. But for me, I see no statistical empirical advantage to be trading right now because, first of all, it is far too early in the day. It is 9:33. We are at a key level within a chop zone, as in I don't know who's winning right now. So for my 0 DTE day trading, scalp trades, or whatever that is, I just don't see an advantage. Maybe if we recapture and hold 59.50, you might want to play it up to the closing value. And maybe if we break out of that, it goes higher. But there is one play in there. But in reality, we haven't recaptured that yet. We haven't held it. In fact, we haven't traded one tick above 59.50. So this is patience. Everyone calm, cool, collected. Like I said, due to last week being OPEX week, I think there is a very real argument that this particular week is going to be quiet in the overall indices. I really, really believe that. I think we're going to find more opportunity in individual equities, such as the fact that Tesla is now up 3% in pre-market trading. And I am so incredibly happy I doubled down on Tesla because I picked up some on the cheap. And now I'm finally back into the green. Look at that pop on Tesla. Now, if you're in the Discord, you get these call outs in real time, but my 1 day gain, which doesn't matter really, the unrealized gain is what matters. But finally, I'm back in the green, up 10%. But today alone, a nice $10,000, well, $9,400 swing in my favor on some Tesla calls. So I am definitely stoked that this is going. Now, Palantir taking a little bit of a hit this morning, but it is still technically in the green. MSTR 411, $2.50 away, 0.6% away from going green. Netflix, $30 away. It's only 0.3 away from going green. I would like to see for everything to go green, but I don't know if that's necessarily going to happen until the XPX can get above and successfully hold above 59.50 here, and even better above yesterday's close at 59.63 and some change. So I'll be watching that. Here's a look at the options flow out of the gate. The Mag 7 tried to get going there for a second, but this is the issue, is the SPY's taking a little bit of a hit out of the gate. So the overall market, we see call selling and we see put buying. Both of those have the net impact of dropping the delta, which by definition is bearish. It forces the market makers, the people taking the other side of the options trade, to balance their books out with legit bearish positions. So as you see the delta drop, that means that market makers literally have to go short the market to protect their overall book. So that's why day in and day out, we have to track the delta. Now, obviously a different story here is the Mag 7 is showing some strength. So the question right now, and granted we're only 6 minutes into the day, is who's right? Is the SPY going to go down enough to drag the Mag 7 with it? Or is the Mag 7 going to go up enough to drag the SPY with it to the upside? Right now, we're getting a mixed story. The story that is being told since market open, like I said, it's a mixed story. So we have to wait. Right now, one is bearish, one is bullish. Let's see who wins out. I don't think that there's any point in really guessing here. Let's just wait and let the market tell us what's going on. Overall, the daily structure is very strong. Yes, we have had 6 green days in a row. By definition, the market structure is higher highs, higher lows. That is bullish. Market momentum, we're on top of the EMA cloud. That is bullish. And then the final thing here is the options market. And in this particular trio, that is arguably the weak thing that's going on. Once again, just because we had so much delta and gamma associated with calls expire on Friday, and some did get rolled out, but unfortunately it was simply rolled out until the June monthly. And right now, just because we're so far away from that particular date, it has less of an influence. Remember, gamma has a much stronger influence the closer in time you are. Very, very important to note that. And right now we're just kind of in no man's land. I kind of want to see us either rush yesterday's close or potentially rush the low, which I think the bears are going to have a really tough time breaking this 59.30 level. But hey, we've seen crazier things. We've definitely seen crazier things. Too legit to quit. Apple getting smacked early. SPY going down 120, then they will bounce it up. SPY going down $1.20, then they will bounce it up or not. I don't know what you're talking about whatsoever. Hey, do you have any options trading courses? In the Discord, we have the previous, basically all the good stuff is in the Discord. So you get my trades, the Piper signal, access to other traders in voice chat, written chat. Obviously, if they choose to share their trades, you get access to it. And then on top of that, there's a lot of educational material. So there are many, many pre-recorded videos. Well, at one point in time, they were streams within the Discord. We recorded it and we're reposting it. We talk about options trading, futures trading, systematic trading, and it really like spans the entire gambit of intro information all the way to more, like I said, more advanced like options trading concepts, and even advanced like systematic of like how to do systematic trading. And like I said, you don't have to like be like, okay, is what he's saying, like, does that make sense? Does it not make sense? Is it worth the risk? Is it not worth the risk? Remember, the entire first month is free. There is no risk to you. You could take advantage of everything in the Discord for an entire month with literally no risk. You just have to make sure to put in that promo code Goonie. If you don't put in the promo code Goonie, I can't really help you. And like it's only $60 anyway. In reality, if you look at the entire space of trading Discords, the Goonie trading Discord is actually comically cheap. I mean, yesterday alone, one of my many trades made $2,125. For you to be in the Discord for the entire year, it's $600. As in, my one trade yesterday paid for 3 years of the entire service. So whether you do or don't put in the promo code, $60, if you're trading in the market, most likely your trades are making you or losing you a multitude of $60. It is a very, very cheap, very favorably priced service. Well, favorably priced for you, not so much for me. So if you put in the code, do it. It's free. And if you forget it, I'm not really going to have, I guess, like, I'm personally not going to care much, because I personally know that people who properly use all the education within the Discord, it's worth, if anything, thousands and thousands of dollars, not $60. Do you invest in or suggest any ETFs or mutual funds? I have a 401k and I need to do something with it. Invest in the overall market and forget about it. It's not that hard. Investing is not a difficult thing. You invest in the overall market, or you invest in high quality blue chip stocks, and you come back in 3 decades. It's really, really not difficult. Overall market. Pick the tech sector, pick the overall market, pick the Dow, pick your favorite blue chip stocks, and literally just come back in 3 decades. Matt wouldn't have to have me be adding value to someone's life. Hit that like button. Thank you. Oh, did we get to the like goal? We didn't. Sorry. I cannot give you the prediction of today's market with the tarot card set. We are unfortunately 206 likes shy of where we need to be. So we're going to have to battle it out with our brains today. Unfortunately, we did not hit that like goal of 500 likes. So we're going to have to sit here and take our risk with the overall market and see how things play out. I wish I could tell you exactly how this was going to go down, but we can't. We're going to have to use our noggins today instead of using the helping hand of the tarot card set. I wish. You guys wanted to play the market on hard mode today. I get it. Yesterday, you wanted to play it on easy mode. We drew the tarot card. It was the moon card. Market ripped from the bottom left to the top right. We all made money doing it. I can understand that. I respect that. You guys, instead of playing on easy mode, you want to really test your chops here. And I can honestly respect that. The fact that you guys are saying, nuh-uh, we don't want to cheat anymore. We don't want the answer key to what the market's going to do today. We would rather try to figure it out in real time. I respect that. I really, really do. Long-term ETFs may be good for a 1K investment. I guess statistically that's true. They may be good or they may be bad. Sure. They will be good. If Bitcoin goes up, they will be bad if Bitcoin goes down. I can't disagree with what you're saying, because like that is technically accurate. They may be good, leaving open the door for they may be bad. And that also leaves open the door for they may be fine. I don't know. Sure. I think that they're going to be good. I'm bullish on Bitcoin in the long term, but I don't need Bitcoin ETFs. I could just go buy Bitcoin, take it off exchange, store it in my cold wallet, and tell the government to kick rocks. But I mean, technically your statement is not wrong. Doge, well, yeah, no, Dogecoin is where it's at. Profit knows what's up. Lamb chops sing along? What? With the trading journal, do you see any value in tracking qualitative data points, emotion, greed, I don't know, as well as quantitative points? I say the more data, the better, because then you might be able to notice patterns of quality stuff and of disastrous, hurtful stuff. So the more data you have, maybe some of it ends up being useless, but I'd rather have more data than less data. You can't buy Bitcoin directly in a lot of 401k. You can if you do a simple Google search and just find the right retirement accounts. I don't know. Sorry, the world isn't set up to be perfectly simple for everyone, but yeah, there are like regulated US retirement accounts that you can buy legit Bitcoin and not be a Bitcoin ETF. But even that, if you look at the big players running Bitcoin ETFs, they're large, they're backed by the government, they're big enough that I don't really have fear of them like going bust or anything like that. I mean, you have huge ones, Fidelity, BlackRock. They're not, if they go under, we have a bigger issue. How about some tips to remain unemotional during trading? Yeah, systematic trading. It's the easiest way to take your emotions out of it is systematic trading. The system tells you when to get in, it tells you when to get out, and if you're not getting an entry and or exit signal, you're not doing anything. These pre-planned entries and exits, it's the best way because all you have to do is basically say you could either fully automate it and the system does it all, and if it's like kind of half automated where you know where you should get in and get out, you just get in where you're supposed to get in and where you're supposed to get out. As soon as you have a real trading system, your life becomes far, far easier because it's taking many of the questions out of the equation. Granted, you might want to improve your system and once again, take in data, improve or refine and improve and refine and improve. But from there, the easiest way to not be emotional is to have a well-defined trading system, which unfortunately, I would say 90, 95, 98% of retail traders don't have. When it comes down to it, as good as that sounds, as good as that logically makes sense, as everyone in here is like, yes, I need a trading system. I would be willing to bet 95% of people watching this video right now, this stream right now, do not have a trading system. They have a good feeling. They're like, no, it looks bullish. It looks bearish. And they don't have a system. They have no system. They're just hoping. They don't know if they have an edge. They don't know if they have positive expected value, negative expected value. It's they're just traded on vibes. And I hope your vibes are good enough that you're net profitable. I know for myself that my vibes are not good enough to be net profitable when I'm just fucking winging it and something looks bullish or it looks bearish or I'm trading on hopium. Folks, I've now been trading actively for over a decade. And I'll tell you this, anecdotally, from the trading data on myself, the only times that I've had sustained periods of consistent profitability is when I am trading perfectly on a system. I don't stray from it and I just stick to it. Of course, if you are trading with your gut, you're going to be right half the time, you're going to be wrong half the time. It is possible to make money randomly guessing, but it is borderline impossible to consistently be making money. And that's the difference between using a singular data point and a large series of data points. On any given day, you could take someone who knows nothing about the market and ask them bullish or bearish, and they're going to be right half the time. Anyone can do it. Anyone can make money in a singular trade in the market, even with no knowledge or the most knowledge, and lose money. What matters here is, are you profitable in the long term? And if your goal, which I would argue is the goal of every trader, is to be profitable in the long term, is you have to have some sort of system. You really do. Is Matt having a rough day? No, I haven't done anything today. Kind of a strange question. And coming back to systems, that is actually one thing that I was able to data mine on my own trading is when I trade too early in the day, specifically before 9:40, I end up like those days are highly associated with me losing money. So once again, I realized that pattern of my own trading by collecting data on myself. And then I realized, oh, okay, so if I want more money, just stop doing the dumb things. A lot of successful trading has more so to do with stop doing the dumb things rather than like doing the amazing things over and over again. If you do like somewhat quality decision making, but really just put an emphasis on not doing the dumb thing, that alone is going to help you be profitable. And then obviously you can drive your profitability into overdrive by also doubling down on the high quality things. So it's just little things like that can help you a lot. Literally, I just went through my trading and I was like, okay, I have this system. But then when I was taking that system's entry, I noticed that if it was before 940, those were highly correlated with being a loser. So I stopped taking those systematic trades before 940. And then actually recently with the volatility and the craziness of April, I actually had to punt it out farther to past 10 a.m. Before the craziness of April, like February, I was good to take the trades between whatever, 9:45 and 10. Like that window was acceptable. It was net profitable to get into the trade. And then with the craziness, I had to punt it out a little bit longer. And that's another thing. The market is forever dynamic. A system that's working today and it is it might die off tomorrow. You don't know that, which is why I personally continually collect data because the market has different regimes. There's different craziness going on. There's seasonality. There's different phases of monetary policy. There's different presidents. There's different tax bills. There's different monetary structures. Things change in the market, which is exactly why you collect data and be like, okay, you have to pay attention. Good trading, in my opinion, is really just like good pattern recognition. Can you identify strong patterns and like use that to your advantage? Can you notice when patterns are no longer a pattern? And I don't know, like obviously that's getting to the point of being very opinionated. And I'm sure there's other value investors like Warren Buffett, who is not really pattern trading because he's not an active trader. He's an investor. He's looking at a company that has strong fundamentals and will most likely grow in the future. And he comes back in 2 to 3 decades and he collects his dividend payments throughout the way. That's another way to engage in the market, but that's investing. If you're watching this show, there's a really, really good point that you guys are more so here because of active trading, not necessarily investing. I have no issue with investing. It's just kind of boring and it's easy. You buy high quality blue chip stocks and you come back in 30 years. That's it. That's it. Do you have content explaining how to create a firm trading plan using AI? Luckily, I've been able to reach payout without any specific trading plan set. Want to take my results to the next level. Well, what you did, and obviously congrats, it's not easy to get a payout, but it's not, by definition, it is not repeatable if you have no trading plan. You got there by pure luck, and sometimes people get lucky. There's no particular plan to buying a lottery ticket, and yet some people can win the lottery. There's no particular plan to winning at slots, and yet some people win at slots. So I would like, first of all, congratulations. And you got lucky. That deserves a round of applause. You got money. That's awesome. But if you want it to be sustainable and repeatable, if you want a particular aspect of consistency in your trading, you have to develop a plan. As do I have a video, not necessarily on using AI. I have a more in-depth one of like actually how to build it out. And then I talk about some data and some patterns within the Discord. But with AI, this is so much of, and I've said this before, not just in trading, but in life, it's just, are you self-motivated? Like right here, do I have content explaining how to create a firm trading plan using AI? Dude, just go to AI and figure it out yourself. It's not hard. Literally go to AI and say, I want to create a trading plan. What are the steps I should follow? It doesn't take some absurd, crazy genius out of the box thinking to pull this off, folks. It's just, do you want to do it? We all have the same amount of time in the day. How much time do you want to dedicate to being an active trader? And I don't count looking at charts as like time figuring out how to be an active trading. Yeah, there's like a little bit of a sentiment to like, okay, how much time do I need in front of the charts here? I totally understand that. But I think too many traders think that like spending a ton of time in front of the charts is what's going to make them profitable. It's not. It's diving into patterns and research and just, hey, go read books, listen to high quality podcasts, and talk to AI. Just talk to it over and over again and talk to different AIs and just say that. Start with that. I want to be a fucking lights out, amazing active trader. Where should I start? And see what it responds and go from there and from there and from there. People with the highest levels of curiosity and follow through are the people who I've personally noticed are successful at this game. That's how you end up like making money, is you have to be hyper curious, and more than your curiosity, you have to have that ability to have a follow through. And I don't know if this is a generational thing, but what I've noticed in my generation, I'm the younger end of millennial, pretty much almost Gen Z. I've noticed that there's the follow through. I actually don't know if there's ever been an easier time. I wouldn't say necessarily entrepreneurship, but it's definitely an entrepreneurial mindset of like, nope, I'm going to do my own thing. And whenever problems arise, I'm going to figure out that problem. I'm going to take it on and go on to the next one. I don't know if there's ever been a time easier than right now to stand out because, folks, be honest, look around. People are lazy. They're lazy as fuck. It's never been easier to get answers to any of your questions possible. And yet I don't think there's ever been a time with such a lack of desire to like just get the answer to questions. We're at this weird inverse where it's so easy to get information. And yet we're at a point where like the average if we had a normal distribution of people, we have never seen such like a generic laziness of people. So you have to be a self-starter. Shout out to Crash Bandit. Yeah, just do it. It's not hard, dude. You guys could sit on ChatGPT for hours and ask it questions. And then be like, yo, where's the best resource for actual legitimate peer-reviewed research articles? Do you know how many fucking, like, I hate school just because I think the way I could go on for hours about why I think the higher education system, I think it has a point, but I think it's taken a lot of bad turns. But even recently, the thing I've been doing is reading a lot of peer-reviewed PhD theses. Like they're out there. They're just for free. You could just read it. There's a lot on trading where people talk about certain edges and advantages they found in the market, and they just did that for their PhD. And they put it out there free for all of us to read. And you don't even have to do a massive deep dive into it. You could just read the abstract and be like, okay, cool. Like I noticed whatever. A recent one I read was the expected returns in different tranches of volatility. So right there, like, okay, this is a peer-reviewed article. I could take the data as having legitimate meaning. And do I have a strategy based off of it? God, no. In the future, I might. But also right now, it helps improve my mental framework for saying, okay, cool. I know that there was legit data of volatility being in a certain tranche, and I could have a different expectation of what to look for in those particular situations. So that's just like one thing. And my point is it's out there for free. It costs you, as long as you have a way to read shit on the internet, you could get it for free. Matt is obsessed with his edge. Typical gooner. Well, being obsessed with my edge is the only way that I've been able to actually make money, once again, in the long term, consistently in this game. And then actually, you could be... What's crazy is with the tools we have right now, you could be more successful, more lazy than ever. So for example, right now I'm pitching to you guys to read these peer-reviewed, like academic market articles. You don't even have to read it. You could load the article or the paper into AI and then have AI summarize it in the 5 major bullet points for you. And you could just take that information and move on to the next one. It's little things like that you have to be hungry enough to go out and get the information. And then if you're creative enough, you can make it a super, super efficient process, a very, very efficient process. Have you taken any trades today? No, it is not 10 a.m. and I have not seen a clear trend yet. If you look at the Mag 7, it was bullish until 940. Then someone puked a position for 10 minutes, and now we've just been flat. So bullish to bearish to neutral. And then the S&P 500, it was bearish to really bearish to now a recovery. And then so that's the options flow. If you look at momentum, 5-minute and 10-minute are bearish. 30-minute is hanging on for dear life. While the NASDAQ, same thing, 5-minute and 10-minute are bearish. While the 30-minute, actually it is technically bearish right now, but we have 2 minutes till we close. And it'd be interesting if we could get a recovery above this 30-minute high. So looking at that, so right now, options flow is giving a mixed signal compared to momentum, compared to price structure. And then the final thing, and the real dagger right here, is we're in my transition zone. So by definition, talk about being disciplined and following a system. This is another thing that I've done a lot of research on. My intraday NQ trading strategy, my day trading strategy that I use on Apex and Take Profit Trader. Another thing I noticed is it doesn't get horribly hit, but the quality of the result drop when I trade within the transition zone. And this transition zone is taken from what's going on in the options market, the major gamma and delta levels. So that was another interesting thing. It wasn't absurd. It wasn't like it went from amazingly profitable to losing. It was still profitable, but the amount of its profit got a lot closer to just kind of like a 50-50 coin flip type of a situation. And right here, all I could tell you is right now we are in this main chop zone. So with respect to price, we are within the chop zone. With respect to price structure, we made lower highs and lower lows, but we just got this big bounce and we're about to maybe make a higher low. With respect to options flow, the Mag 7 is giving confusing inputs, and so is the SPY. So I see no advantage right now. If you guys took a trade already, I would love to know what you were trading off of, because I am not seeing anything right now that is screaming, this is an amazing trade. I'm just not seeing that quality risk to reward setup. If anything, we just flushed the overnight low right here. It looks like at roughly 2 a.m. East Coast, we just flushed this low. So it might be a fake out breakdown, but obviously if we start to hang out below 59.55, we might be talking about a sell-off to the bottom of the transition zone. That's maybe something to consider. Same thing in the NASDAQ here. Both the ES and the NQ. ES is the S&P 500 futures contract, and NQ is the NASDAQ futures contract. Both of them are flushing their low from this 2 a.m. So I want to know if this is a fake out breakdown and we quickly recover above it and just kind of freaking some people out, or if we're legit going to hold below this. So this is probably, as of right now, my major watch of how are we going to be behaving in this particular zone. But overall, it's thus far shaping up to be kind of a choppy mess. What time is it? It is 9:59. So, and on top of that, we're about to get a change of the hour, and for whatever reason, it seems as if a lot of the bigger players are making their trades right around the change of the hour, a couple minutes before, right at the change of the hour, or a couple minutes after. So I like to see where this aggression is coming in right now. Is it coming in on the bull side? Is it coming in on the bear side? Obviously, we could track it via options, which that's looking messy. 5 minute, 10 minute, that's still bearish. The 30 minute might have well, it did sweep. The question is this a fake out breakdown, or is this giving us an early indication that we're about to break down? Same thing on the NASDAQ here. It is, as of right now, if that's bearish, that's bearish. This is not looking so hot. That's bearish, also not looking so hot. So I'm going to give it an opportunity to see if this is all a brutal fake out and we push and we hold 59.50, or are we about to snap and test 59.30? And then from there, if we can't hold the bottom of the transition zone, are we going to puke to this 10-point region between 5900 and 5910? That would be my downside target, between 5900 and 5910. But that would only come into play if and only if we do not hold 5930. So it's an IFF statement, if and only if. So that's what I'm looking for. We got this jolt at 952. The Mag 7 is at pretty much the lowest delta reading of the day. The SPY just took a hit. We are seeing puts being bought and calls being sold on the S&P 500. We are seeing puts go flat on the Mag 7, but calls are still being sold. So it's not really bearishness on the Mag 7. It's a lack of bullishness. There was a free-for-all starting at 940 of call selling. So it's not like new bears are coming into the system, but the bulls are definitely leaving the system. So I think that's an important difference. Are we going down because of bearish aggression or because lack of bullish aggression? And right now in the Mag 7, it's more so of the lack of bullish aggression, not necessarily like straight up bears. The S&P 500 is a different story. The puts were bought, and then they popped, and then they're being bought again. And if anything, the calls are kind of flat. So on the S&P 500 side of things, you're seeing legit put players right now, legit put players, but we might be putting in a higher low. So we're just seeing a bit of confusion between how people want to play this one, because we're just getting very, very different stories. The price structure, price momentum, and options flow are all, they're not telling us one cohesive story, which just means chill. I mean, you could take a stab at it if you're like, nah, man, I'm bullish. Well, you could go bullish right here. You could risk the recent low and Godspeed. You have 50-50 shot, well-defined risk, and I hope you flip the quarter in your favor. Like, it's kind of up to you. Musk, I'm pushing ahead with lawsuit against OpenAI. Trump to make 3 p.m. ET announcement with the Secretary of Defense. U.S. official Trump announcement to be on the Golden Dome. To be on the Golden Dome. The vibe today is choppy. Well, I don't know what the vibe is, but I would say from a market standpoint, we're literally within a choppy zone. So I agree with you. We are literally in it. That's why I paint this out every single day, because this area is meant to just be like choppy, kind of indecisive. So just waiting to see how this shit actually plays out today. We don't need to rush it. And actually, why we are waiting for, ideally, something to happen, a very quick shout out to Apex Trader Funding. They are the partner of today's show. This is the final day of the 80% off deal. I don't know what the next deal is going to be. 80% off your eval, as in you could take the test on the 50K account, which is by far the most popular, for only $33 if you use that code Goonie. If you don't use the code Goonie, you're not going to get 80% off. It is pinned to the top of chat. It is in the description of the video. Reminder, you're allowed to have up to, hang on, I'm showing you a screen that's not there. Reminder, you're allowed to have up to 20 of them. So per user account, you can have 20 different trading accounts. I have mine all maxed out. I have 20 and they're all funded right now. But remember to take the test. If you use that code Goonie, instead of being $167, it's only $33. And I just wanted to remind you of it. It was a timely partnership because this is the final day. I don't know what the next deal is going to be. For whatever reason, they don't tell their affiliates of when the next deal is, what it's going to be. So all I can tell you is this is your final day right now. Pinned to the top of chat, 80% off. And if they choose to not run it back, it'll probably go to 50%, which means your test will be like $80-some. So just wanted to call that out for anyone who's interested. And just a reminder, you can go all the way up to 20 right here on my own 20 funded Apex. And then I also have my 5 take profits right there. 1, 2, 3, 4, 5. So I have 25 in total. 20 from Apex, which is the max amount, 5 from Take Profit, which is the max amount. Those are my 2 favorite places to trade futures at this moment in time. But the entire sphere is very, very dynamic. It changes quickly. But for recent history, those are 2 that I deem to be the most consistent, which is exactly why I use those 2. But if you want to check it out, like I said, pinned to the top of chat in the description of the video. And then also, if you have any questions on the SIM to funded world, we've spun up this other channel where I do trade reviews, and then I also explain rules about SIM to funded. So Apex rules explained, prop trading explained, the best Apex account, Apex, how to pass the evals, like stuff like that. So basically the most common questions that I see from you folks, we've put in video form and answer it. So this is on YouTube. This is on Rumble. On YouTube, it's on a new channel, just at Matt Kohrs. What you're watching right now is either Matt Kohrs Show or the Matt Kohrs Show. So on YouTube, it's split up. But if you're watching on Rumble right now, it's all on the same channel. I wasn't forced to make a whole new channel. On Rumble, they run things a little bit differently. So it's all on the main channel. But it's the same video, same title. So feel free to search it. But if you want to know what SIM to funded trading is, watch this. If you have confusion about the rules, watch that. If you want to know how to pick the best account for you and your trading style, watch that. If you want a very easy way to pass the Apex evals, watch that video. It's all in there. And then I also break down just some trading strategies that I think you guys are going to enjoy. So just wanted to call that out. SPY's picking up a little bit here. What's the flow looking like, team? What's the flow? Mag 7 has gone flat. NASDAQ has also gone flat. S&P 500 flow popped, pulled back, put in a higher low, popped again. The question is, are we swinging back up, or is this now just another lower high? So we have higher lows, but also lower highs, suggesting consolidation. And that's also literally what we're seeing in price. So at this point, we might just be wanting to mark out the 30-minute Orbo. If you don't know what the 30-minute Orbo is, it's the opening 30-minute bar high and low. And there is some interesting statistics around which side you break. Are you breaking to the downside? Or are you breaking to the upside? So we could wait for that. But right now, we're just really not that far off from where we opened up. And we just need to wait. We just need to wait. We need to wait. We need to wait. Other than that, there's really not much to do. Remember, not every single trading day is built the same. Sometimes we have amazing bull rallies like yesterday where it's pretty easy to identify and it's pretty easy to ride. And then there's days like today where, who knows, maybe, I don't know, maybe in the next minute it becomes amazing. But as of right now, it is a chop fest, an absolute chop fest. So because it's a chop fest and because I'm personally attempting to be way more disciplined than I've ever been for a consistent period of time, I'm just not doing anything because I don't like what I'm seeing right now. I'm curious, for any of you who have already traded today, what were you trading off of? Like, I mean this genuinely, and I don't mean this to come down on anyone. I'm just curious what some of my active traders in chat have already been seeing today, because I'm seeing literally nothing. Not only is price chopping, we're in a chop zone. I guess the options flow is slightly favoring the bears. So if you took a short on maybe some sort of technical breakdown, I kind of get that because you're with options flow. Momentum, the 30-minute is bearish. The 30-minute is bearish. I suppose, but even that, we haven't really taken out a low. Well, I guess NASDAQ just did. If you just went short on the NASDAQ, right here, this little breakdown, risking that recent high, I kind of get that trade, I suppose. You're kind of saying, well, okay, flow in options, not so good. Momentum is bearish. I kind of get it. I don't like it because overall we're still in this chop zone and we could easily bounce off the intraday low. We could bounce off of this technical support. So I get it. I'm not necessarily the biggest fan of it, but overall I'm seeing a bunch of nothing right now. I'm seeing a bunch of nothing. 5-minute chart at open 1348 EMA. I know that became popular. That was popular there for a second post the AMC craziness. There were some people who supported that. But what's interesting about it is if you backtest that at all, it is not net profitable. So I don't understand, people started trading that strategy just because they were told it was profitable, but seemingly people didn't do any studies on it. And once again, that's an actually easy thing that you could go talk to ChatGPT right now about, and it just literally was not net profitable. Of course, you could find trades that make you money, and of course, you could find trades that lose you money, but I'm saying the net situation of the 1348 crossover, it is not a net profitable strategy. So for you to make it net profitable, you would have to add in additional filters of what trades to take and what trades to not take, because you definitely have to somehow find, I would say, a common pattern between those losing trades to know how to cut those out of the overall system. Is it possible for people to use multiple systems? Of course. I mean, I per day am at minimum tracking at least, even if I don't trade it myself, even if I have a sim account trading it just to track it, per day I'm at least looking at 5 different systems. 1348 is highly profitable crossover on the daily time frame. Scaling it down is dubious. I don't even know if it's, what do you mean it's highly profitable? It's not. See, when people say things like that, do you realize that if something as rudimentary as 1348 is highly profitable on crossover, you realize that that would have been data mined away and the biggest players in the market would be trading that all the way, inherently taking away the edge. That is, that's just a very inaccurate comment. You cannot say something like 1348 is highly profitable crossover. It's not. And the reason I know it's not is because that is way too simplistic. The 1348 crossover, if it were that profitable, every hedge fund and their grandmother would be trading it, thus then taking away the edge. If you look at basic indicators, RSI, MACD, EMA, folks, those have been data mined away for years now. For years. It doesn't, at one point in time, it might have been profitable, but when people try to campaign that nope, that's the end all be all. You just got to trade the 1348 crossover and you're going to make a shitload of money. Seriously, you think think about it this way. If it were truly that simple and there was that free money machine, wouldn't you notice a lot of people that are making a shitload of money all of the time? It just doesn't add up. And yet people time and time again fall for that type of stuff because they want it to be that easy. So I get it. I get why we all have blinders on hoping no. The strategy's honestly that simple. I get it because we all are attracted to this concept of something being stupidly simple, making us a lot of money. Everyone wants a huge reward for putting in minimal work. But when you take any couple seconds to deep dive into, does that make sense? Does that not make sense? If it were as simple as just buying or selling on the 1348 crossover, it's gone. Hedge funds would be trading forever. There would be massive retail traders. The first person that found it would have never told anyone. He would have just kept trading it and trading it and trading it and trading it and trading it. Like, it just doesn't make sense. Should I code it quick to backtest just to prove a point? Yeah, go for it. Sure. Hey, dude. We all have 24 hours in the day. You could choose to spend your 24 hours however you would like. Fading my trades is a highly profitable system. Dude, we all go through patches of that where it feels like, dude, as long as you just inverse it. That's how I felt in mid-April of this year and all of January of this year. I swear to God, if you ask anyone in the Discord, if you did the opposite what I did for all of January and for mid-April, you would be a gazillionaire. A gazillionaire. And then there's periods where it feels like you're the Michael Jordan, the Kobe Bryant of trading, and you can't miss. You're the Stephen Curry. But no, we've all been through those patches, I swear. In January, I don't know what was going on, but whenever the market zigged, I zagged, and it was actually statistically abnormal how wrong I was. Because remember, still inherently, when you boil it down, most trades, you have a 50-50 opportunity. So it starts to get weird when you have a 50-50 opportunity, as in imagine flipping a coin and picking it wrong like 5 or 6 times in a row. That, like, statistically, you start to get to the point where you're like, what? Like, you're actually breaking math when you're wrong that often in effectively a 50-50 game. There's those periods where you just feel like a crazy person. You're like, how the fuck could this possibly happen? And then guess what happens is you go from those really bad stretches to February, lights out. March, lights out. I went from being in the hole to being up $300,000 on options alone. It happens. There's like a pendulum of back and forth, and $300,000. It back and forth. Like, instead of just complaining, my tip here on how to handle that, of how to go through it, is when you keep losing and losing and losing, there is this weird, like, feeling in your gut that you want to get that money back. You want to revenge trade, so you start sizing up. I'm telling you, you got to do everything possible to fight that gut feeling. And if anything, size down. When you're on a losing streak and you come up with this fucking genius idea to double up, triple up, quadruple up, I'm telling you, those are the perfect times to skip the trade. But if we're being honest, you're not going to skip it because you're a degenerate. So do everything in your power to size down. We've all been through those bad patches. And you, like I said, you come up with this genius idea where you're like, I'm going to trade more. I am definitely gonna trade more. And it always ends in disaster. I think we should sell a service where it's for tilted traders, and we could track tilted traders just so the rest of the world can do the exact opposite thing. Because as I like to say, there's nothing guaranteed in the stock market, but I do believe one of the guaranteed things is when you're tilted and you're revenge trading, I believe you are guaranteed to lose. There's something about it. There is some like brutal lesson that the market gods are attempting to teach us all. And I think that is 100% it. I want to create an app where if you're a tilted trader, we pay you for your trade so we could do the exact opposite. Like literally just fading revenge trading. And then the other service I want is, has anyone noticed that when it's your first time trading, like ever, it's always an amazing lights out trade? Have you guys ever noticed like a complete noob trader trade one of their entire career? Somehow it's absolutely amazing. Another service I want is just for people's first trades. That's all I want. I just want to know you're something about it. I don't know why, but brand new traders, their first trade of all time, for whatever reason, the market god is like trying to hook them in to this degenerate life of trading. And I think they gift them with an amazing trade number one. An amazing trade, number one. So because of that, I have a genius idea of let's just copy all first-time traders. Their very first trade. It only works one time. You have one shot at it. And I just want to copy them. It might be beginner's luck. I don't know why it works. I'm not here to pontificate upon why it works. I'm here just to notice that it does work, and I would 100% pay for a service where I know it's like they have to somehow verify it's their first trade of their entire life, and we could all just take advantage of what you're referring to as beginner's luck. I'm here for it. I'm here for it. Made 30K on my first trade. See, right there, Mr. Veg. Mr. Veg. You're proving my point. LOL, blow the count. Your first revenge trade is actually profitable as well. So now we have three services. Your first trade, your first revenge trade, and then your continuous revenge trading. Before you know it, dude, I'm going to have an entire ecosystem of apps. I'm going to revolutionize. Oh brother, 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 oh brother. All right, I'm seeing the SPY pick up. I'm seeing the Mag 7 potentially pick up. 30-minute is attempting to battle. The NQ, I'm just really wondering right here in the bottom left of your screen, this little fake out. So we had this 2 a.m. low. We pushed below it, try to push back up. They try to push it below again, trying to push it back up. It seems as if maybe buyers are stepping in. Are they going to give us this push up right here? Are we going to get this little trend line breakout off of these lower highs, higher lows, bit of consolidation? Are we going to get this push to 59.50? We don't really need the daily chart here. Hang on, let me get this bad mamma jamma up. Let me get this bad mamma jamma. All right, we definitely don't need that. I don't know what that's from. All right, here's the NASDAQ. Obviously, I'm assuming a lot of people are watching this trend line right here. Once again, both the S&P 500 and the NASDAQ are consolidating. We have lower highs and higher lows. The 5-minute and the 10-minute are on the bear side of things, while the 30-minute is on the bear side, but it's seemingly testing. So we might be getting this ramp up. 4-hour is bullish on both. We are about 7 points shy of the next open interest level, which is a hair above the intraday high. And as of right now, we have not broken the 30-minute Orbo. We have not broken the 30-minute high. We have not broken the 30-minute low, the opening 30-minute of the day. We have yet to break that. If you choose to take this long trade, obviously your risk is the 1009 low. If you choose to take this short trade, your risk is either the 1006 high, the 954 high, or maybe just the high of the day, depending on your risk tolerance and whatnot. So all things that are very fair to consider. A theta burn day? Yeah, I agree. I agree. We are coming up to VWAP on NQ. We are coming up to VWAP. What time is it? It is 10:21. Do I want to front run this Orbo breakout? If I do, my risk is a little bit farther away. Maybe I should just be patient and wait for a bit of a pullback. I don't mind going long here, especially seeing starting at 1017, the Mag 7 showing a bit of life, starting at 1010, and then again at 1017, the S&P 500 showing a bit of life. I mean, if I do go long here, there is some distance to my next level, but the risk reward is not necessarily favorable. So maybe the key here is to have patience, maybe either wait for a pullback here and then go long into it, or wait for it to hit it and then the pullback and see if we base off of it. But chasing at this point, I mean, the odds of it hitting are high, but the risk reward isn't necessarily there. So coming back to like, is it a profitable, repeatable system? Not necessarily, because every so often you're going to be wrong on it and you took on more of a hit than you did in the chance of the reward. But that's also the technical breakout. Even here, I mean, we're on the edge of a technical breakout. So if you want to be real careful with it, you could use the breakout bar. That's another viable system. It's not necessarily my favorite. And when I say system, I mean a risk management system. Is if you're playing a breakout, you could literally use the low of the breakout bar for whatever time frame you particularly care about. Like I said, it's not my favorite. In my opinion, it doesn't really give you much room to breathe, but it definitely could work. I don't know what this line's about. That is not an important level. Don't worry about that. But you could wait for the first bar to close above and whatever this recent low is. So that would be a relatively close stop. Looks like it's a fake out and we're running into a bit of resistance. The Mag 7's still climbing. The SPY is attempting to climb. I see Palantir turning back around. I see Tesla turning back around. MicroStrategy going green. Bitcoin trading at 105,000. Interessante. What's everyone's opinion? Is it time to go bullish? Is it time to go bearish? Or is it a continuation of the best time of just fucking sitting on your hands and doing absolutely nothing? Is it the best time to literally sit and do a bunch of nada? We're still getting, technically we took out this recent high on the 3-minute. If you use a larger time frame, we still have lower highs and higher lows on both the SPY and the Qs. MSTR swinging back up, Palantir swinging back up. Tesla was looking great and then got smashed pretty hard. Netflix trying to go. Meta's picking up. It feels like everything's pushing a little bit, but we're still not seeing that strength that we want to see. The overall market, the vibe of the market right now is like it's trying to show some strength, but we're just not really getting that last umph. We're not really getting the follow through. So for me, it feels like we're not getting enough measurable data points to actually throw on a trade yet. I'm not necessarily convinced. It feels like it wants to go. It feels, based on some of the upswinging price action, structure, momentum, options, putting those together, I don't think it's out of the cards to say 59.50. The issue is we're not being told exactly the story. The 5-minute, guess what? Just got smacked at the top of the cloud. The 10-minute just got smacked. The 30-minute still technically on the bearish side of things on ES. Same thing on NQ. Got smacked. 30-minute went right up, got smacked. So that's what I'm saying is things were peeling up from a price structure with the breakout, price momentum we were testing, and options flow. Yeah, it did vomit, but then around 10:17 we saw a little bit of a shift. So when I say I feel, that's the empirical data things that I'm measuring it off of. But also, we're not getting a full follow through. We're seeing maybe the initial concept of it wanting to do something, but here we are. We're just not seeing. We're not seeing the EMA breakout. We're not seeing a new fresh high, and we're not seeing the options market behave as strongly as I would like it to. So it's improving. It's being a bit constructive, but not enough for me to be going long, especially while we're still in this chop zone. If we saw this setup and we were bouncing off the top of the chop zone, different story. But nonetheless, we're still in the chop zone right below major resistance. So if you want to take a stab at it, yeah, just be very careful with your risk. Be very, very, very careful with your risk. I don't hate it. If you go long right now, risk the recent low. You're taking on maybe minimal risk. I don't know what the next bar is going to be. You might feel like a genius. It might explode from here. You took on baby risk. It breaks out and rips and you make a shitload of money. I'm not in control of the next bar. I'm just saying you should be in control of what you can reasonably manage, which is going to be your risk, your reward, your entry, your exit, all that good jazz. So I don't hate this entry. I don't hate the break. I don't hate it. It's not necessarily for me. But I would definitely be, because it's not like a lights out setup where everything's aligning, I would be more mindful of my risk and what I would really try to do is move my stop to break even as soon as I reasonably can. Matt, what do you think is the probability of AMD closing the 9th to the 12th gap before bouncing to the 200 SMA? No clue. Go go look at the delta in the options market for that expiration date, and the probability of touch is generally double the delta. So you could do some quick and dirty math on that one. You could do some quick and dirty math to know the probability of a touch. It's roughly double the percentage chance of it going in the money, or closing in the money, I should say. So if the delta is 10, the probability of it being touched between now and that contract's expiration would be 20%. That doesn't always hold true, but it's like just some crude math. That's pretty much going to be more often right than it is wrong. Technically not a 50-50 chance, but that's getting very, very nuanced, I suppose. Okay, I need to bring up the options flow over here because you never know when you're going to get that trade opportunity. You never know. All right, let me bring up the delta on this screen on my additional monitor over here. And if you're just joining in right now, we're still chopping. It is almost 10:30. We're almost an hour into the day, and we've barely broken the 15-minute Orbo, like just barely. We have not broken the 30-minute Orbo, and depending on how things go in the next minute and a half, we haven't even broken definitely haven't broken the hour Orbo. So like I said, I mean, you could see it on the chart. Anyone with functioning eyeballs can realize we've just been going sideways. As of right now, there's no trend. And if there's no trend, you just got to wait until some sort of trend actually presents itself. So I've had no reason to go long. I've had no reason to go short. Not only are we trending sideways, we're in my defined chop zone. The options flow isn't showing anything too amazing. We just got to wait, team. You just got to wait. But it does look as if today we're going to get the rare circumstance of the 30-minute Orbo breakout or breakdown being the exact same thing as the initial bounce, which is the 60-minute Orbo breakout or breakdown. For whatever reason, they call the 60-minute Orbo. For whatever reason, they call that the initial balance. I think it goes back from the days of pit trading, where the initial balance was played out over the first hour, and that's like when the big players were getting in and getting out, hence the name, the initial balance. QBTS ripping, what's the all-time high? I don't know. Use your chart, dude. Use your chart. And I think it was because they had an announcement this morning. But once again, why buy something that's ripping? Chasing is not good. If something is ripping, why go long? If something is completely plummeting, why go short? If you're chasing, if you're getting it near highs, if you're going long near highs, or if you're going short near the lows, by definition, you're chasing. But more important than that is, by definition, you're taking on the most risk possible because you are the farthest away from whatever your reasonable risk point is. You want to this is a game of minimizing risk, not optimizing risk. Like, that doesn't make sense. It just doesn't make sense. People are way too willing to chase. You don't want to be, because think about it this way. If you're buying at a high or shorting at a low, you're putting yourself potentially in the position of top ticking it in the wrong direction. As in, you bought at the high and it turns right there, or you shorted at the low and it turns right there. Why even put yourself in that risk? It's not worth it, because maybe it doesn't hit you, but you trade. And if you trade in that risk, it's hit you and you keep trading in that style, well, eventually you're going to be the person who top ticks it or bottom ticks it in the wrong side. And before you know it, all the gains you made up until that point, because you took the worst trade from a risk perspective, all those gains you made, gone, disappeared. I thought Matt was shuffling cards. Oh, you guys did get 500 likes. All right. I am a man of my word. I have the predictive. Honestly, if the market starts moving now, this is all because of you guys taking way too long to smash that like button. But nonetheless, I will tell you exactly what's going to happen in the market today. No more guessing. 3, 2, 1. All right, there's that. We do the shuffle. Abracadabra, alakazam, oh market lords, tell us what you plan for the day. A little magic. You got a pepper in the magic on top here, and we are seeing it. Boom. Whoa. Temperance. Don't know the vibe, but it tells me that we should be patient. A little bit of a flat rainbow in the back. Could be an LGBT thing. The cat has two different colored eyes, which I think represents the dichotomy of the stock market. But I'm also seeing golden cups. So it's telling me that if you are a patient LGBT person in the market today, you're making money. But once again, that is just my initial read on the card. I'm by no means an expert. But I will tell you. I'll find it. I'm just guessing. I'm just ripping it. Oh, here we go. Temperance, balancing opposing energies. Temperance comes between death and the devil in the tarot deck. Jesus. And this card's harmonizing energy provides respite and calm for those strong and potentially life-changing forces. The imagery of this card of liquid pouring in an endless stream between two vessels signifies the unhindered flow of life energy, which is neither one extreme nor the other, but exists in a constant state of flux and equilibrium. This card advises you to be patient, to look for the middle ground, and to work with others for the benefit of all. It can show a mature attitude in which excesses are curbed and extremes of emotion are tempered. When appearing with justice, it can mean a welcoming judgment, while with lovers, it can indicate good communication and the resolution of conflict to the satisfaction of both parties. Well, we drew it by itself, and it's honestly what we're kind of seeing in the market today, that it's a middle ground. It's literally telling us today is going to be choppy. Like, LGBT, let's get big traders. Folks, don't shoot the messenger. Don't be mad at me. This is literally what the market has in store for us today, a choppy day. Unfortunately, we are not going to get a nice trending day like we've seen recently. This is going to be a chop fest. So if you get in and you have some money, it seems like it's a day to sell premium. It seems like it's a day to aggressively move your stop to break even. And it's a day to really not overstay your welcome. If you see a good money-making opportunity, take it down, capture it, and move on with your life. It just is what it is. Maybe today will be a bit different. I'm not going to say better, because you can still make a lot of money by selling premium on these days. You really, really can. I mean, you can make a ton of money doing it. So it's just understanding the day we're in. But this is not the market. The market gods are not giving us a trending day. They're simply not. The Mag 7 sold off, flat, up a little bit. S&P 500 sold off, popped, came back, and flat, maybe picking up a little bit. Where are we? NQ, fake out, trend line tagged it again, came down. We're literally just in the middle of the 1 minute EMA. Talk about not trending. Same thing here on the S&P 500. Lower highs, higher lows, fake out, breakout, fake out, breakout, fake out, breakdown, fake out, breakdown. We're coming to the end of this somewhat soon. Obviously, we could redraw it and make it a little bit more extreme, because at the end of the day, I was still just on the 1 minute, but that's where we're at, folks. That is where we are at. Where are we? I'm getting some alerts. Oh, that has to do with the bond market. I don't think you guys necessarily care about that one. Maybe we're pumping up a little bit here. Mag 7 is maybe trending up. Here we are. 1, 2, 3. 1, 2, 3. Is the fourth time the charm? What's the risk reward of this setup? The risk reward isn't bad, honestly. I mean, it's just literally these recent lows. We're really not that far away from it. The issue is even though the risk is reasonable, you're taking a trend trade where there is no trend. So that makes it a little bit more complicated. There's really just not the most going on right now. I mean, how have we not broken this? We have not broken to the upside. This is one of the most quiet first hours we've seen in a minute. No breakout to the upside, no breakdown to the downside. Like I said, we did break the 15-minute Orbo down. 50-50 chance that you touch the other side of the Orbo, which at this point would be 520.10 on the Qs, 593.63. So 50-50 shot of touching that as soon as we broke down around 9:48 this morning, 9:50 this morning. But in reality, we're range bound, and then we're now within a range. Ever since 954, we have an even smaller range that we've been trapped in on both the SPY and the Qs. Tesla was green, but it's given that back. I'm not really seeing much. What's moving, folks? Give me something exciting to call, or before you know it, we're going to have to default to you guys calling in so we can get into some form of weird argument. I'm trying to not go off the rails today. Trying to not go off the rails today. Oh, brother. Oops. Did not want to do that. Oh, I know what I could check. Okay, I do have 2 more tools to look at very, very quickly. Let's get an idea. Nothing. Ceiling at 5980 and a floor at 5900. All right, so that's not the most helpful because we were not that close to either of those. And then what do we have here? Same thing, 75. All right. I'm taking a stab at it, risking this recent low. I like that we took that high out and not yet the intraday high, so we still have some space to go. So I'm taking this technical breakout from this recent high in line with the consolidation breakout on SPX and this breakout here. Like I said, I'm literally just risking this recent low. I'm trying to play it with tighter risk, but the one thing I do need to do, and pardon me for this one, I do need to get this trade in relatively quickly. Where are we? Options, vertical. What is today? What the fuck? That's trading at dog shit, dude. Huh. All right, I'm not necessarily the biggest fan of this trade. How are we setting up, folks? How are we setting up? We hit 50. Are we going to get rejected here? All right. Interessante, mi amigo. Finally, an hour and 10 minutes into the trading day, we're seeing something. We're seeing some form of life. If you're in the Discord, I just made one trade before yesterday when we were talking about the quality of trades. This is not. Yesterday's trade was a 6 out of 5, I would argue. Like, I really liked yesterday's trade. This one is more of a 3 out of 5. Okay, if you're in the Discord, that's there. Piper has yet to fire. Actually, Piper is about to fire. Okay, literally as I'm talking right now, Piper just fired. What is this? What is today? The all right, I'm getting this in as quickly as I can. All right. So if you're in the Discord, Piper just fired, and I also put in my day trade of the day. And then for those of you on stream, I did take this trade. I'm up a little bit. Technically, I'm buying just below VWAP, so there is a chance of a re-VWAP test. So I like it because I bought it at a discount. I am long below where the average person is long. Granted, not by much. I kind of wish I got in at 12, but alas, it just is what it is. Oh, you guys cannot see this. Oh, okay. Sorry. You can see this. I am long at 21,426.5. Like I said, I bought this breakout with the idea it was a shorter term breakout. It wasn't the breakout of the day. I bought this little node breakout to target this level, ideally to target a runner that goes higher and higher and higher. So I definitely wouldn't be chasing the intraday high. I think that's dangerous. And at that point, I would also be buying on top of VWAP. So the fact that I'm long below VWAP means I'm in at a better average value than traders on the day. That's what happens when you go long below VWAP or short above it, is you're in technically at a discount. So I have a discount right now of about 4 or 5 points, which honestly, it's not much. Like I said, I kind of wish I went long here at 410 where it popped up, retouched this EMA and came up, and I could have risked that low if I wanted, or the low that I'm currently risking. Actually, I'm going to move my risk up a little bit right now to that low. Oh, but if they retouch 400, that might be a natural level. All right, I'm going to move it up to 90 right now. So that means I'm taking on 36 points of risk. And each point is worth $20. So basically, I'm taking over on just over $700 of max risk at this moment in time. And obviously, my target's all the way up here, which would be $1,000 of profit per account. It's about 50 points, 51 points for because of commissions and whatnot. But really, what I'm looking for is just to see if this could hold VWAP. I hope it can. I'm taking a risk. If I'm right and we hold VWAP and this is a legit bullish breakout, then it works. And if I'm wrong, I'm wrong. All I can tell you is I have well-defined risk. I'm attempting to trade with this current trend. We have a higher high. We do have higher lows. So the price structure is bullish. The 5 minute is now bullish. The 10 minutes now bullish. The 30 minutes now bullish. The 5 minutes bullish. The 10 minutes bullish. The 30 minutes bullish. But I should note they're testing, like they could easily get smacked here. But regardless, at this moment in time, that pump pushed it on the bullish side of things. So price structure is legit bullish. Price momentum is attempting to hold bullish, albeit on the NASDAQ, it's a little bit suspect, a little bit questionable. And Mag 7 is trending up. I wish it were a better trend. But what I like here is the SPY just ripped to a new delta high. So finally, after literally an hour and 10 minutes of waiting, we finally saw some movement from big money players. And my goal is just to trade on the right side. Now, my concern here is, first of all, we're still in this transition zone. I'm worried that there might be profit takers as we've taken out 59.50. If there's not, cool. I want to rip it up to 59.63. I want to ride this all the way up to yesterday's closing value on SPX if I can, which actually means I should probably put in an alert, add alert. Okay, alert set. So that's kind of the plan. Is I'm praying that this holds because I don't have that good of a fill, and I'm hoping we could get follow through to this red to green test. That's the trading plan for my day trade right now, or I should say, yeah, for this like NQ swing trade, which I'm really thinking about lowering the odds of my success, but taking all risk off the table and just moving my stop. Fuck it. I don't care. No risk. Whatever. The reason I'm being abnormally aggressive of my stop movement right there, I just moved my stop to break even, is because little bit of a chasey entry. If I were a little bit better, I would have been in at 10:38 instead of 10:39. I was a minute slow to the game. The odds of me getting stopped out are very, very high. It's common when you get up to VWAP to dance around VWAP. So the odds of this working are very low. But I'm willing to take that trade-off because there is now no risk of me losing money. So you saw this yesterday where the first trade or two, I ended up they were just break-even trades. And for all I know, what if this is a fake out and we all the way come back down to 400 and I could get a 25, 27 point better entry? Cool. That means I could get in. And then I still have skin in the game. If for some reason VWAP holds and we just rip, okay, whatever. If there's follow-through, there's follow-through. So to me, this is a reasonable, as the card tells us, this is a reason. The card is literally telling me this is the best way to engage with the market right now. The card is literally saying I need to be in the middle of the road today. And to me, this is the middle of the road option. Is I'm protecting my risk. I could give myself an opportunity to go long or short depending on what happens with no risk. But yet I still have some skin in the game in case there's a crazy buy program that goes up and runs the market all the way up. So it's outside of my normal trading system, but I'm literally just doing what the card is telling me to do today. It's literally like the card saying be middle of the road. Okay, not my normal system, but I'm literally just doing what the market gods are informing me to do. If we can hold 50 here, I'm looking great. The odds of holding 50 low, so I'm taking that the 50-50 option. Probably get a little retest. Chris, are you literally just regurgitating what I am saying? Like 100%, you are just regurgitating what I'm trying to explain to the entire audience. Come on, man. 63%-ish chance of success to break even at plus 10 points. Yeah, but that odds is most likely based on at some point today, not necessarily on this particular move. And that's the difficult thing when you have to consider the pullbacks of these SIMDA-funded futures accounts. So the odds of that are actually maybe even a little bit higher of the upside gap fill, or maybe that's exactly right. But remember, that stat is based on at any point in the day, not necessarily on this particular move. And I would love for it to happen on this particular move because then I don't have to sweat anything. Now, if I had more buffer, if I was willing to take on more risk, I can move my stop to the intraday low and just let this sit. And now more risk. Sit and probably have a better chance of it hitting, but to increase your chance of something working out, by definition, you have to take on more risk. So I'm basically giving myself less of a chance of it working out, but when you lower your reward, you're inherently also lowering your risk, and now my risk is already set to 0. Thoughts on NVIDIA this week? Might go up, might go down. I've done a lot of thinking about old NVIDIA, and I've narrowed it down to pretty much 2 options. Pretty much either up or pretty much either down, you know? Nope, that's with my trail system. Moving it to plus 5 after break even every 10 points. I should have explained more. How would your risk management tell you the odds of us hitting a key pivot level of yesterday? That doesn't make sense. Is you moving your stop higher a part of your trading system, or is it a loose parameter, more leeway than the system? Purely curious. I do have a stop movement of my normal system right now because I don't have the buffer built out. I actually have to be more aggressive with it. So if I were to trade my system, not worrying about my buffer, my stop right now would be at 21,400. And instead, I am being more risk adverse, and it's already at 427. So like I said, the system that I would use in the market right now, had I not be if I'm not concerned about buffer, and if I had some room to really let this breathe, my stop would be at 21,400. Instead, I am 27 points above that. So I'm being more risk adverse right now because of the current value of my accounts, which the math changes based on how much money you have in your account, because remember, you're trying to overcome variance. Grass is annoying. Okay, that's some helpful commentary. Apple's popping a bit, new high of day. Are you regurgitating what I'm saying, Dewey? I literally only echo what you say. Okay, so we got the 30-minute Orbo breakout. That was obviously right here at 10:39. We're getting a bit of a pullback. We're not quite at VWAP, but we're coming to it. And most likely what's going to happen is exactly what I told you is VWAP, for whatever reason, the market loves to retest VWAP. So I might get absurdly lucky if it bounces right now, but most likely I'm not going to get lucky. And the trade-off there was me just reducing my risk, which I didn't really like this trade. So I don't mind that I gave myself a shot. seemingly not panning out. It got wow. Look at that. A tick away. Look at that. Literally a tick away from knocking me out. Dude, if this, and we're not out of the woods yet because we're not making a fresh high, but if this bounces right here without just randomly ticking me out, amazing. Come on. Come on, market gods. Come on, temperance card. I'm exclusively doing what the market lords, the lords and the ladies of the market are telling me what to do. They will. I am simply their vessel. They trade through me. Come on. Just rip us right out of here. This might be the trade of the week. If this goes and rips all the way up to my profit target after literally like one tick, one more tick, and I was out of this. I cannot explain how, like, dude, if this Qs went down by 1 more cent, I would have been knocked out of this. Come on. This is what it's all about. Wait, Trump is speaking? I just got an alert that Trump is speaking.
That's really what we did today. I think it was a really
after House GOP meeting.
It was a meeting of love. Let me tell you, that was love in that room. There was no shouting. I think it was a meeting of love. There were a couple of things that we talked about specifically where some people felt a little bit one way or the other, not a big deal. And I covered them. It wasn't so much a speech. I covered certain points. And I think there was, I'd be very surprised.
You told him you were losing patience. Are you losing patience?
No, I didn't tell. Who told you I said I'm losing?
That's what we heard inside the room. You
But it's a lie. Wait a minute. Wait. Who's told you that?
You heard from people inside the room.
Oh, really? It's totally true. I never used the term. I didn't say losing. I didn't even talk about it. In fact, it's the opposite. I think we're going to get it done. I'm not losing patience. We're ahead of schedule. Anybody that told you that is a liar. Wait a minute. I never mentioned the word losing patience because I'm not losing patience. We're ahead of schedule.
That's why I asked you. I want to get
Well, why don't you go back to your source and tell them they're liars if the source even exists?
My volume thing is working a little bit too well.
Sure. Always
Is that okay?
Yeah.
You want them to swallow
Yeah.
this bill?
Dude, trade of a life right here.
There'll be some changes. John Thune and Mike have been very closely aligned on this. They've been moving it up together.
Apparently you said don't F with Medicaid. Apparently you did say in the room. There is some concern among some Republicans, including Senator Josh Hawley, that this could impact benefits and that could amount to a quote hidden tax on the.
I didn't say. Here's what I said.
I'm wondering if you're.
Here's what I said. What do you want to say? I said waste, fraud, and abuse for Medicaid. If you find waste or fraud or abuse, we want to strengthen Medicaid. We want to strengthen Medicare. Waste, fraud, and abuse. The Democrats will let illegals be on. They'll destroy it. It will be destroyed. They want to have illegal immigrants be on. And if you do that, because that's not, it wasn't designed for that. Waste, fraud, and abuse.
Can you guarantee that your voters who supported the election, particularly working class voters, will not lose health insurance under this bill?
Oh, they won't lose health insurance. Not only that, remember, I'm cutting drug prices by 85%. And right now, I'm saving it. I'm saving the whole thing because I did something that nobody was willing to do. Other countries pay a tiny fraction what we do. And I instituted favored nations. We're now going to pay the lowest in the world. We're going to be the equivalent of the lowest country in the world. People go to London, they go to Canada, they go to other countries, many other countries, because they want to buy their pharmaceutical products, their drugs, at a fraction of the cost. Now we're going to have the lowest cost anywhere in the world, and nobody else would do that but me. And that might be an election by itself, might be election winning. Now, when you add that in, when you put that into Medicaid and Medicare, we've just strengthened Medicare and Medicaid. And the Democrats won't do that. You know why? Because they're taken care of by the drug companies. And the ones that are taken care of are hard line. Some Republicans get money from drug companies, and that's okay. because they're okay with it. I talked about it. The drug companies take care of everybody. It's the biggest lobby, most powerful lobby in the world. There's no lobby like that. But the Republicans are okay with it. Not only okay with it, they love it. It was time. So we're going to cut drug prices from 75 to 85, in some cases even more than that. You know, I was telling the story that, and some of you were at that news conference. I gave a news conference where I was the first one in 18 years to cut drug costs for the year. And they were like a quarter of a point to half a point less. And I was very proud of that. Now I'm cutting them by 80, 85% because I stopped the scam.
Can I do it again?
Scam between the middlemen.
Get away.
Drug companies.
Go
This
away.
was a giant
Leave me.
scam.
Go.
And
Nah,
by the way,
shit.
Order
other countries,
canceled.
because other
Tagged out for
countries
break even.
fought for This was a giant scam.
Well,
and we're not gonna
technically,
have it. So remember this,
net
go back
ahead.
and tell your
I moved it a tick in
people,
my
if you'd like
favor.
to, that the Republican Party is cutting the cost of drugs.
Well, that's a bummer.
by as much as 85%, not 8%, not 5%, not 1%, 85%. And you're going to have the lowest drug prices anywhere in the world because I'm doing favored nations. And it's all done. I signed it. And the Democrats will unsign it. And the drug prices are going to go up. And I think on that issue alone, you can't lose an election.
Say that your DOJ is weaponizing with the arrest of a congresswoman, Democratic
Oh,
congresswoman.
give me a break. Did you see her? She was out of control.
Did you
You know, those days are over.
Did
The
you
days
tell her
of
to do
woke.
that?
The days of woke. No, I didn't. The days of woke are over. That woman, I have no idea who she is. That woman was out of control. She was shoving federal agents. She was out of control. The days of that crap are over in this country. We're going to have law and order.
Mr. President, thank you very much. You campaigned on lowering the price of groceries. How do you justify cutting food assistance in this bill?
Let me just tell you, the cut is going to give everybody much more food because prices are coming way down. Groceries are down. Eggs. You told me about eggs. You asked me a question about eggs my first week. You said eggs. I said, I just got here. Tell me about eggs. And it was going through the roof. You know that eggs now are way down. Everybody's buying eggs. Groceries down. Energy's down. Gasoline is now they're buying gasoline now for $1.99. If you look back, you'll see $3.50, $4. This country, we're going to lose this country. Our country now is respected all over the world. All over the world we're respected. We were a laughing stock. The entire world we were a laughing stock. I went to the Middle East, and those rulers of those three countries are very powerful people, very big people, very rich people. They respect our country again. China was going to take them over. You know, China was going to they were going to get into the, if you look, Saudi Arabia, you take.
Well,
take
happy I
a
had that
little
stop.
What was happening with Qatar, UAE, great people, unbelievable leaders, but they were abandoned by this country. And they're not going to China anymore. They love us, we love them. We're going to take care of them, and they're going to take care of us. We came back with $5.1 trillion. Trillion. Every other president would have come back having spent $5.1 trillion as usual. And remember this, we were losing $5 billion
Look at that puke.
a day.
Couldn't hold the breakout.
Past administration. I have to be a little bit careful the way I talk because there's a lot of anger about that administration. And by
We're
the
right
way,
at these
the real
recent
question,
lows.
Who ran the auto pen? Okay, who ran the auto pen? Because the things that were signed illegally, in my opinion. I think we've just proved that. But our country is respected.
Still in the
All
chop
over
zone.
world we're
Couldn't hold
respected.
50.
We were laughed at 7 months ago. Then you had November 5th. And our country is respected again. Thank you.
Do you think Congressman Lawler and the other stalled Republicans will vote for this bill?
Well, I guess that is that. That is that. Mag 7 started to take a hit there. S&P 500 did rip flat, and then everything at 1056 started to take a bit of a hit. Everything at 1056 started to take a bit of a hit.
Order submitted.
All right. I'm taking another stab at it. I think this is enough of a pullback that even maybe we could even see a reversionary bounce of half this sell-off range, basically from 594 to 592.50. So about $1.50. So I'm wondering if we could even just bounce back up to 593.50. So I took that trade. It's right here. I might actually move my profit target down to maybe just at VWAP. But as I kind of alluded to before, when I got into this trade, I said, okay, if it goes, it goes, and I'll move my stop to break even and not risk anything. But if I could get in with a deeper discount, as in farther away from VWAP, well, that's going to favor me. I am now long at a more advantageous level than the average market participant is right now. That's the entire point of tracking VWAP. So, and also, we basically, I mean, if for my fib traders in here, I'm not the biggest fib trader, but that's kind of what I was marking out. If you look at this pump starting at whatever, we'll call it 1033, whatever this high is, we had a decent pullback. So just even from the vantage point of mean reversion, I mean, we pulled back, 80% of that range? I was kind of eyeing up maybe, oh wait, can I do it the other way just to see how deep this was? Can I measure it this way? Will that work? Yeah, I mean, literally a 90% pullback of that full range. So just from the sentiment of mean reversion of, I don't know, some people like to play the 50, the 61. I mean, like I said, I'm not the biggest VWAP trader, but another way of just measuring, did you get in on discount or not? And that's exactly what I did. And honestly, dude, should I just run it? We're too close. All right, here's what I'll do on this one. In the event that we take out 25, I'll move my stop to break even. And then guess what? I have another freebie play. If it works, it works. If it doesn't, it doesn't. Remember, especially when I'm trading. So normally in my system, when I have more range, more buffer, I get stopped out at break even about a third of the time. When I have to play it this way, it's even larger. It's pushing like 45% of the time because I have to move my stop so much earlier, because once again, it comes back to just not having that much buffer to deal with. So it's just how I trade. And maybe some of you agree with that. Maybe some of you don't. It's just what I find. It's how I've found success trading on Apex and Take Profit Trader and that type of stuff, is being more than normal, like absurdly dogmatic with protecting your downside, protecting your downside, protecting your downside. In fact, the times that I just have a complete shit show, it's when I'm taking on more risk and then I double down, triple down, quadruple down, overtrade, and it just becomes like a horrible feedback loop of basically just getting my ass handed to myself. So it is this type of mantra where I'm just like, nope, okay, in the world of NQ, you could take a 20, 30 point hit and be fine, because there's enough movement, there's enough range. If you can keep your losses under $1,000, if you can keep your losses under $500, you're golden, because generally in any given day, there's going to be opportunity. And if not, there's always the next day where there's even more opportunity. And I get it. We've all been there where you just don't want to lock in a red day. There's something psychological about it where you just try to dig yourself out of the hole that day. And we're all there. We've all been in those spirals where it's just absolutely horrible, absolutely horrible. And it's one of those things that when you go through this more and more and more, you realize that oh wow, had I just protected myself the previous day, this day was amazing. Or even within the same day, hey, if I just admitted I was wrong earlier, there was another amazing opportunity later on. So it's just, and it's so against really humans of just you have to develop that ability to just admit you are wrong. Just be yep, nope, didn't get that one right, and just move on with your life. And I find that that's way easier to handle when you're trading systematically and you have your rules. And that's exactly what I had here. The system fired. I'm taking it. I have my risk, and I'm actually just I'm really chomping at the bit to front run my system and move my stop up even earlier, just to once again take all my risk off the table. So that's the goal. As I did yesterday, unfortunately, I'm going to have to leave you guys now as this trade is live and active. And I will just post on Twitter like I did yesterday. I try to be as transparent and open as I can. For example, yesterday, right here, I let you guys know how I concluded, made $1,000. That was day one. I don't know how this trade's going to go. Right now, I'm literally break even. Might be in my favor, might be against me. I have no clue. But this is probably going to be my final day trade of the day. If this one's a break-even trade, I might take another stab at it this afternoon. But in reality, I'd prefer to not do that. I would prefer to just let the die roll, let the cards fall on how they do on this particular trade, and call it a day after that. So I will update you guys there. But my final reminder is this deal on Apex to get 80% off, it ends today. This is the final day. I have no clue what the next deal is going to be, even if they're going to have a deal. It might go back to their 50% off, which is definitely a price I would personally never pay. So check this out. This is the final day. Pinned to the top of chat in the description of the video. If you want to trade with someone else's money, this is your final 16 hours to get involved. It is that code GOONIE, GOONIE, will get you 80% off. Once again, this is your final day. That's what I have for you right now. We will be posting an update video later on this evening after the market closes at around 7 p.m. Eastern. And then we're going to be streaming once again tomorrow morning, 9 a.m. bright and early. I hope you crush it today. Be careful. As the tarot cards are telling us, as the cat lords of the market are telling us, today is kind of a choppy, sideways, non-strong trending day. So protect your risk and definitely don't be swinging too hard. Simply just the market's not set up for a nice big trend today, and you're going to get that. You are definitely going to get those types of days. In fact, we probably get more of these days than those nice, big, beautiful trending days. So please be prepared for it. And generally, the lunch session is a choppy, shitty mess. I would not be surprised if this particular lunch session is even more choppy and sideways and a pain in the butt to handle than normal. So be prepared for all of that. That's what I have for you now. I'll catch you later on today in the update video, and then once again tomorrow morning. And in the meantime, if you want to stop by in the Discord, have at it. Once again, don't forget to use that code GOONIE. That's what I have for you today. I hope you make a shitload of money. I'll catch you on later. Peace.